Hello, Ghost Traders. My name is Angelique with GhosTrades, and it is time for your market update. And wow, that was a crazy week we just had, to say the least. 2 weeks ago, the market looked like it was going to give one last push to the upside. Then August 1, it took a complete nosedive and even gapped down twice if you count Monday. So why all the insanity? Well, many have their thoughts, but let's get some overall news out of the way, and then we're going to get into it. So on the political front, which, by the way, you just can't ignore at this point, even if you are one of those quote unquote not political people, I get not wanting to get in all the drama, but at this point, we have better start paying attention. So for those living under a rock, President Trump chose Ohio Senator J.D. Vance as his running mate in the 2024 presidential election, and they are continuing on the campaign trail. Since Joe Biden is officially not running for re-election, Kamala Harris chose Tim Walz as governor as her running mate in the 2024 election, and they have started on their campaign. Now, as for the presidential assassination attempt on President Trump at the Butler rally, even though some say it didn't even happen, yes, not making that up, don't believe your lying eyes, I challenge you to look a little deeper into that story. I say this as a perfect example. There's a lot of things floating out there, and you have to make investment decisions on this information. You know what you witnessed that evening or soon after. And love him or hate him, if you pay close attention to what's being said now, it just goes to show how information is quite literally fed to us. And you have to have discernment regarding what you hear and what you believe. So I want to talk about banks. There's been some pretty crazy things happening in the background while all of us are doing what we can to make things happen on a daily basis. Banks have been going down, big banks, not only the small mom and pop banks. We must take full responsibility over our assets. Make sure you're diversified. I like physical silver. It's supposed to be 1/8 the value of gold, and it is not. And not investment advice, but the fact that it's dropping right now makes a great opportunity. So back to the banks, we have national banks like Chase, PNC, Axiom, Dollar, Wells Fargo, Bank of America, Zions, just to name a few that are shutting down a lot of banks. In fact, over 33 banks in 2 weeks last month were shut down. Now that may not seem like a lot, but that's a huge number. In fact, Bank of America alone closed 100 branches so far this year. And it also seems that JP Morgan, Chase, Bank of America, and Wells Fargo, and some other large banks, they're under federal investigation due to scam and fraud surrounding the instant payment platform Zelle, and the fact that they were not really protecting people as they should who are using the platform. And the SEC is also looking into Bank of America, Wells Fargo, and Morgan Stanley, who were accused of cheating customers out of billions of dollars of interest payments by directing their customers towards an account that paid little to no interest called cash sweep accounts. So there's a lot of trouble in these big banks that were always thought of as too big to fail. In fact, all of those banks I just mentioned and a lot more, they've increased the number of capital that they're holding to cover all of those potential losses that they're anticipating from loan insolvencies and credit card losses. Together, they're setting aside billions in emergency provisions. Remember, fiat currency is a debt instrument. The sooner we all understand that, the better we're going to be prepared for what's coming. So as for the market, again, we had a crazy week. But think about it. Corporate earnings aren't doing the best. Everyone's worried about the economy while the Fed's in la-la land saying that they might adjust rates in September. But what's their thinking behind it? Job growth came in at 114,000 in July, a lot less than what was expected. And at the same time, the unemployment rate rose 4 consecutive months. And on Friday before the open, it came in at 4.3% instead of the expected 4.1%. And oh yeah, if you're an American, you're hard-pressed to even get a job. The numbers on the 10-year bonds did really bad. That tells me that even Wall Street doesn't have faith in the system. So let's look at the S&P 500. So if we go to the S&P, there we are. What I want to show you is that right now, while the stock market is on a high valuation, it's coming off of those highs. Then on Friday, it gapped down below the uptrend. You see this uptrend on the yellow line? Well, this red candle out in the middle of nowhere here that broke that uptrend that, again, has been going on since October 2023. Huge gap here. And, Israel and Iran, they have massive tensions between them right now. In fact, to the point where stores are selling out of water and other supplies. And then Israel's government's gone underground into their bunker complex in Jerusalem that's only used for time of war. We also have labor market issues, manufacturing slowing down, consumer confidence going down. We have credit card debt spiking. We also have a spike in delinquencies in small businesses, auto, individuals. The list goes on and on. Even Warren Buffett sold nearly half his stake in Apple. This happened a few weeks ago, and he also sold almost $2.3 billion of his Bank of America stock. In fact, his company, Berkshire Hathaway, dumped $75.5 billion worth of stock, and they're now sitting on a record cash pile of $276.9 billion. And since July 10th, the Magnificent Seven, NVIDIA, Microsoft, Google, Amazon, Apple, Tesla, Meta, they lost more than $2.3 trillion in the market cap. This was led by NVIDIA, Microsoft, and Google, or Alphabet, those being the top three. And of that $2.3 trillion, $1.5 trillion was on Monday alone. But hey, at least defense contracts are doing amazing. So if you look at those, we've got Northrop Grumman, RTX Corp, and then we have Lockheed Martin. Kind of tells you again, if you look at it, a little bit about what's coming as well. Now, I find it interesting that the powers that be are saying nothing is wrong. There's a ton of things in your own life that if you pay any attention to them whatsoever, they're going to tell you something's just not right here. And I've been saying this for some time now. We've been in a recession for a while, so just look around you. Look at your accounts, your regular bills, your grocery bills. Just because definitions keep changing changing very conveniently, financial or otherwise, facts are still facts. We can only add so many zeros and print our way so far out of this. And then if you look at the U.S. debt clock, we are at $35 trillion in our national debt. Again, we cannot ignore this. And then I also want to show you this. There's something called Taildex, the Taildex index. It basically measures when the market thinks that there's actually going to be a major event. And on Monday, it spiked to its highest since the 2020 pandemic. Now pair this with the Shiller index, it's also called the CAPE ratio. This is something that overall tells us whenever the market thinks there's going to be a significant downturn coming. That's also spiking. It's almost at 36, and every time it's peaked above 30 during a bull market rally, the market has lost a minimum of 20%. So all of this to say that on Monday, we saw a huge volatility spike. So let's look at the VIX, something that you definitely want to keep an eye out on. So let's look at the VIX right here. There we go. Look at that spike. That's huge. Guys, it was over 65. This has only been seen 2 other times in the entire history of the stock market. The 2008 financial crisis and during the 2020 pandemic. But nothing to see here, right? And then last Friday, we had, again, a huge gap down. Again, let's go back to that S&P. We had that huge gap down again on Friday, and then another on Monday. This is that green candle right here on Monday. And if for any of those who trade the gaps, this gap pretty much just filled in on this S&P 500. We came within a couple dollars of closing the gap completely. And as for the trading day on Friday, we absolutely filled the gap and then some. So besides all this insanity that we've been seeing for a while now, there really isn't a whole lot that was going on in the United States on Monday, especially for this huge gap down to take place. But I've always said this as a global market. This is no different. And also, we're not the only ones having issues with our big banks. So overall, the Bank of Japan in 2 back-to-back trading days went from hawkish to dovish. And people are really still trying to wrap their heads around a lot of it. Again, it's a global market, and it's important to realize that. But all this stuff with the Bank of Japan, well, they're kind of looking to us, the United States, on a lot of levels. So on Monday, Japan stocks tumbled. And the Nike or the Nikkei 225, depending on who says it, it's their version of our S&P 500. It closed at 31,458, which was a 12.4% loss, the worst day in the index since Black Monday in '87. And it also went down on Tuesday to break a record of the largest 2-day drop in history. And then other global markets were also hit. I mean, not only did our Dow fall out of the sky going about 1,000 points down, the S&P had its worst day since the 2022 global market sell-off. Even Bitcoin fell, almost 54,000. Ethereum also fell hard to its and basically lost all of its 2024 gains. So that being said, there's something called a carry trade, where the US dollar and the Japanese yen are paired against each other. And without making this into a 2-hour-long update, it basically has a lot to do with the interest rates. So the US is fighting inflation, which equals the Fed doing quantitative tightening, which equals high interest rates and a high yield. Japan, on the other hand, a little bit opposite of us, and they're in a deflationary situation. They have low interest rates. So the carry trade, while it easily happens in currency markets, let's say we are physically traveling, just make it a little more real to you. So essentially, you travel to a country whose currency that has a low interest rate, and you purchase a bunch of that country's currency. Then you go to another country with a high interest rate, and you exchange the currency you just bought for that country's currency. You invest in that country's bonds, you have a higher yield, and voila, interest rate arbitrage. However, of course, there's more to it. Remember, Murphy runs the market. There are things like leverage. If you are literally traveling between countries, the time it takes you to do that, interest rates change. They always change. And that gap between the two ends up tightening. Needless to say, between the Japanese yen and the US dollar, that's exactly what happened. So if you can imagine, some of these banks are leveraged pretty huge, big and small banks. And to add all of this, what we spoke about earlier, and all the stuff that's happening, you can understand why everyone's in panic mode. Now, on a good note, with all of this, guys, we are traders. Keep that in mind. We can trade up, we can trade down, and we can trade sideways. This is what I've been talking about for a while now. It's beautiful. So that being said, for those of you who are investors, very different from a trader, there might be some opportunity at some point, but be very cautious. You must realize that we've never seen what's happening in this world. Similar, maybe, but on many levels, not the same at all. So be very cautious when you jump back in. Do your homework. So I also want to show you real quick, before we finish, as I always like to do, I like to look at the current gold and silver prices. So let's look at gold and silver, and you can see here on gold on the left, it is consolidating into this really nice pennant, and it's holding pretty steady near its highs at 24.31, and it closed right on my purple. So we'll see if it stays within its pennant or if it breaks through. As for silver on the right, it's at about 27.5, also sitting on one of my purples. So we'll see if it pushes through to the upside or if it uses it as resistance and stays within its current downtrend. Silver's been coming down since mid-July, so there might be some really nice opportunities at the moment. So traders, buckle up. You know, we're going to see what happens next and what the market has to offer us. I commend you for taking responsibility for learning this information and for being on top of your assets. So if you haven't already, get deep into our live and on-demand sessions so you can be sure you know what to do in a down market. I've mentioned many times that I have no idea how this market is being propped up, and you must know how to trade to the downside for what's coming. And now you see what I've been talking about. While we may have some final attempts to save face, after all, it is an election year, get ready for a wild ride. And with that, I will see you in our live sessions. And until then, happy trading.